Hello and welcome to a brand new edition of Who Moved the Market. I'm Surabhi Upadhyay and with me on the show today is Mangalam Maloo. And the markets might be sort of a little dull, lackluster, but I think the spirits are high, Mangalam, because finally, after I think a 2-week gap, the rains are smiling upon us. And if nothing else, we're seeing some specks of green in the FMCG space, the area that you track so closely.
Well, the FMCG space, only twice in the last 10 or 12 fiscals, on a fiscal year basis, the index has given negative returns. So it's done well, and this year as well, so far, we're so close to the market record highs. The FMCG index is virtually at a record high, and it's the second best performing index after the auto space, and this after having gained last year as well. So the consumer story in India is well and truly alive, is what I believe.
Okay, absolutely.
Always.
Yeah, always. He'll bat for the FMCG space in all its glory. Just a quick update. I mean, the monsoons, most of us would have witnessed this, whether you're watching the show from Delhi or Mumbai or any other part of the country, chances are the rain gods have finally made their way towards your houses. And what we're now given to understand is that the deficit, which was running close to 30%, 28% to 30%, as of June 25, that is likely to come down progressively because the next 5-6 days we're expecting a good rain spell across the southern peninsula, across central India, and across the northern parts of the country. By the way, Mangalam, did you know that's the first time in, I think, 61 years that the monsoons hit Mumbai and Delhi on the same day?
Wow, I didn't know that. I mean, I wasn't aware there 61 years ago for sure. So, yeah, I mean, it's a good thing. Our country is, irrespective of the spread of irrigation and all of that, we're still largely monsoon dependent. And 40% of our revenues for the FMCG company comes in from the rural, the rural areas. And that is extremely important in terms of growth. And monsoons this time around, more important than the last couple of years also because the last couple of years, there was massive inflation that had an impact on rural demand. So this time, all hopes were pinned on monsoons to lead some recovery in rural demand and thereafter leading to a bigger recovery in the second half of this year when the festive season kicks in as well. Inflation has started to cool off. What would propel a rural consumer to buy more? Better rains. So it was all the more important, and I'm glad that it came better late than never, though it's the first half of monsoons yet. The second half of the monsoon, we still have to deal with something that is El Nino. Let's see whether that will have an impact or not. But the fact that monsoons come better late than never is having a positive rub-off on all the FMCG stocks.
Oh, absolutely, because the expectation is that paddy sowing and cotton sowing, all this will start picking up. There was a lull, but now hopefully if we get decent rainfall, then it should get better from here on. Most FMCG stocks actually looking at a Dabur, Imami, Lever, Tata Consumer. A lot of these names are actually holding out in positive territory today. So that's monsoons and that's good news. But what's bigger news for the space is that the industry titan, okay, maybe I shouldn't say titan, the industry leader HUL has a new man at the helm. It's a change of guard. And I think the market is looking at Lever very, very carefully. I mean, he's a lifer, right? Some 30 plus years. You know,
everyone who's at the helm at the Lever, group is usually a lifer because once you join Unilever, it's very difficult for you to leave Hindustan Unilever unless the prospects are being the MD or CEO of another company, and it is a CEO factory. Over 500 CXOs in the world right now are ex-Unilevers. So, it's such a process-oriented company that Sanjeev Mehta's, passing the baton to Rohit Jawa should not be a big thing because it's still a process-oriented company which will work for, which will work for a long time in India itself. Volume-led profitable growth, which is sustainable, is something that they speak about every quarter. However, it's also time to look back and look at Sanjeev Mehta's career. I mean, when he joined Lever, under him, the revenues of the company have grown 2 times. Margins have grown 700 basis points. Net profit has grown about 2.5 times. The stock itself has returned about 4 times after nearly a decade of doing absolutely nothing. But these are just numbers. What we, can't put our fingers to is the kind of experiences that he would have had. Imagine being at the helm of Levers and being hit by demonetization, being hit by the GST regime, being hit by COVID, being hit by digitization. Everyone's talking about the naturals wave, being hit by Patanjali at that point in time, and the massive inflation that most company leaders have never seen there in their lifetime. So one person steered the company through all these things, and
with a 700 basis points increase
expansion in margins, increasing their revenues.
Finding that hard to process, like 700% basis points increase, not like 50 or 100
not a dinky toy. And this is Unilever's revenue that he's doubled. It's not that it started out at 1 rupee and he made it 2 rupees, right? That was one. And secondly, he did all of this with some really cool industry-leading innovations. Something like Vimy, which was winning in many Indias. The first company in the country to actually say that, okay, you know, India is not just one place where one company, one rules work. You divide the country into several clusters, and that's how HUL will do it. That's how they won. They started digitization, so all the apps that they have, the handheld apps, etc. It's now called Jarvis. The earlier one was Shikhar. All these things were done by him. Imagine an ecosystem as big as Unilever running them through the GST regime. All of this must be a nightmare for him to be doing that on a daily basis. But then again, that's what you get paid for, and that's what Unilever is all about. So
I guess so.
Big salute to Sanjeev Mehta for everything that he
I can understand why you're a complete fan, because he has some absolutely impeccable credentials that he kind of rides home with as he passes on the baton. But now a little bit about the new man as well, Mr. Jawa. I was reading somewhere that he is credited with perhaps really lifting the business in two geographies, China and Philippines.
Yes.
And so therefore, I mean, he's got that international pedigree and that international exposure. He's in the home market now. So what do you think will be the task at hand? Is there a set of expectations that in general the sector is looking to him towards?
I would say, if I had a wish list to give to Mr. Jawa as a small little puny little consumer analyst, I would say that one thing that, Hindustan Unilever, while has done extremely well in a lot of things, the one place where it lacked was it did not create the kind of value that one would have assumed it would through the acquisition of GSK.
Okay.
So the Horlicks and the Boost business should actually get a bigger boost, lack of a better pun. The second thing they should do is that, a lot of the high-end beauty and personal care spaces which they've not accounted for yet, or they're not getting a lot of market share in yet, and they've ceded that market share to a lot of the D2C players, the new age companies, the ones who claim to be paraben-free, cruelty-free, all non-toxic and all those things. Basically, charging 4x the average price for a premium product. I think HUL has a right to win there as well.
So more premiumization.
More premiumization, especially in the beauty and personal care space. And at the same time, of course, creating a lot more value out of the brands that they recently acquired. Horlicks and Boost is just one of the many. They've acquired VWash. They've recently got Oziva as well. So those are the immediate, operational tasks at hand. But as far as the business is concerned, of course.
So before we talk about larger business trends, since we're talking about competitors, you've been telling us how well ITC is doing with its FMCG business, right? So there's a lot of competition, and you can't take that lightly.
You can't take that lightly, but the thing is that ITC's categories of growth are different from Unilever's categories of growth. ITC has a large proportion or large exposure of their business comes in from the food space, which HUL does not. HUL is largely home care and personal care. Though both their businesses are growing, they are also equally, aggressive in the food space. But their food areas are, you have a lot of ice creams, you have a lot of tea, you have a lot of coffee, you have now increasingly malted food beverages and all of that. So that is something that,
I think personal care is where the overlaps
are. The overlaps are for ITC. So don't see a lot of competition coming from ITC. A bigger competition comes in from Godrej Consumer. Let's see what they do in their soaps business, because Synthol as a brand has been gaining market share over the last few quarters, and NXHUL man is leading that place now. Sudhir Sidhapati, under whom they've done a lot of innovations as well, right from the Magic Liquid Wash, which is basically powder, you put water in it, becomes liquid, and that's a premium product. Secondly, they've also recently acquired Raymond's consumer business, so let's see how they scale up Park Avenue and the other verticals that they've acquired. So those are a couple of things that we'll be watching out for from a competitive angle. And in the rural natural space, so what does Dabur do, what do Imami do? But they're too small as compared to Hindustan Unilever. The other thing I'll be watching out for, mainly because it is also the year of raw material price moderation or cooling off, does volume growth come back? Because the last few years, the companies have been increasing prices to keep up with the sort of inflation that we've seen in input prices. So now, will they lead to some price offs, some volume growth? Volume growth coming back with margins staying intact will be a big thumbs up if Rohit Jawa can manage to do that.
Another little piece of trivia that I read, I don't know if it's true or not, but it's in the papers.
Yes.
Rohit Jawa spent 13 billion, I think it's dollars or is it euros? $13 billion, I think, over social media spends. I'll go back and check the numbers in the market that he was heading in China, because he was looking at a lot of influencers and social media activists, so to speak, to really go ahead and as you're straightening the distribution to really spread the message. So I don't know, I mean, if he comes up
That's
with
an interesting trivia because I'm not too sure of the number.
I'm going to check. While you tell me more, I'm going to check that number.
It's quite a number.
Over 4 years, not
4 years. Yeah, okay, cool. You know, but in India as
13 billion euros over 4 years.
13 billion euros over 4 years. In India as well, that has happened actually. If you notice, the share of ad spends going towards digital has surpassed the share of ad spends going towards TV.
Yeah.
So that's the way of life. And I remember this, and since we're talking about trivia, about 4 years ago, there was this marketing enclave, conclave, so to say, which had taken place. And there was one person from HUL who came into that room in one of the 5 stars in Bombay itself. She put up a picture of some really famous Bollywood stars, cricketers, and all of them. She said, "How many of these guys do you know?" Everyone in their hand, in the room,
put up their hand.
Then she put out a slide of some people, and she said, "How many of you all recognize these guys?" None of them were able to put their hand up.
Yep.
And she said, "You know what's the common thing between these two? Both of them have the same digital footprint." So there were a bunch of people, the sharpest marketing minds in the country, sitting in a puny little plush hotel in Mumbai, knowing nothing about a bunch of people who have as much following as Amitabh Bachchan, Sachin Tendulkar and Shah Rukh Khan. So that told you that 4 years ago, HUL knew that digitization is the way to go, and they started seeding influencers and regional influencers for all of that. So yes, what Rohit Jawa did does not surprise me. Now that you speak about it being over 4 years, the market being China
and China's gigantic,
And 4 years later, what's happening in India? Of course, a lot of money will go to these places, and you trust influencers, and they're basically a form of medium, right? If an influencer has 3 million followers, that's a direct distribution channel for them to go ahead and market their products.
Absolutely. So we'll watch out for, you know, all things new and a continuation of all things old and great at HUL. That's a lot about HUL. But tell us more about this report that Citi has done on Tata Consumer. They're quite optimistic, it seems, and the stock is reacting positively. So what's the story?
Optimistic indeed. And 2 things stand out in the Citi report. The first thing is that they're the only ones who have a target upwards of 1,000 rupees on Tata Consumer. Wow. So they have a buy rating with a target price of 1,020, makes them the most optimistic on the street.
That's about a 20% upside on the stock from
20%
where it is right
upside,
now.
yes. And why? How do they arrive at that value? They value the company at 56 times FY25 earnings. So that's some multiple. And 2-year forward multiple for the company, it's always traded at around, you know, the current multiple is 5% lower than the multiple that they've assigned to the company. So they believe that, and they have the highest EPS estimate on the street as well. So it's basically aiming for blue skies for Tata Consumer. Let's hope the company, for the company's sake and the investor's sake, goes ahead and manages the numbers that Citi has been projecting. They expect the growth businesses of Tata Consumer, which is around 15% of their overall sales, to be 27% of their overall sales, which includes the likes of Narishko Beverages, which has Sampann, Soulful, and all those other products that the company has recently entered into. So those are a couple of factors we have to watch out for. They also have a risk, you know, they've listed down a few risks that Tata Consumer faces as well. And that I would take the liberty to extend it to the entire sector. With all the blue sky scenario that we're painting for the sector, there are 3 risks which are still imminent upon the sector. The first one, of course, is if the rural demand does not come about because of El Nino factors. There is delay in demand recovery, then your entire story goes for a bit of a toss. Secondly, if commodity prices start to rise once again. A lot of these FMCG companies also have exposure to foreign exchange. So if there is a volatility in the FX space, then again the margins go down. And finally, competitive intensity. No one's just speaking about that. If raw material prices are going down, they're going down for everyone. So if someone else reduces their price a little more than someone else, then they stand to gain the market share, because India at this level currently, the markets that these guys are targeting would be more price sensitive.
Got that. So, you know, that brings us basically to the end of the discussion. So let's round it up with some of these concerns that you raise as we look at, let's say, the second half and, you know, remind us of the lessons from Q4 as well. Because I remember, I think, at least for some companies, not all, volume growth was a little sluggish or just about picking up. So what is the market expecting? Is there an expectation that maybe many companies will keep sort of putting a pressure on prices because volume growth is going to be a focus?
Volume growth will be the focus in the second half of this year. Second half of this year, we'll have a clearer picture of demand as well, because you'll have, you know, monsoons behind you, hopefully normal monsoons or not as impacted monsoons. And secondly, you'll have the festive season coming by as well. So to that extent, you expect some anywhere between 5 to 10% volume growth for the industry as a whole, led of course higher by the industry leaders themselves. themselves. And the second trend that I'll be watching out for, specifically in the consumer space, is how do the second-rung consumer companies perform. We've seen strong performances come by in the fourth quarter from names like Jyoti Labs, from names like Bajaj Consumer, from specific segments like male grooming and Emami. And these are stocks which haven't... Beardo. Yeah. Beardo is Marico, sorry. Okay, Emami is the man company.
The man company.
And Emami has, Fair and Handsome and all those other products as well. Male grooming segment grew about 29% in the fourth quarter in an otherwise bleak performance for the company. So these categories and these companies I'll be watching out for more so in the second half, because they managed to grow at a time when inflation was high. How do they grow even when inflation is lower? And do they continue to grow faster? Because these stocks have done nothing and they are available at a very, very sharp discount to all the larger players like Maricos and Daburs and HULs and Tata Consumers that we speak about. So the second rung of FMCG stocks, is it time for them?
Okay, well, going by the number of men that I know personally, the amount of time they're spending on grooming, whether at home or in salons, I'm guessing that these are products that have really taken off. Whether it's Man Company or whether it's Beardo.
There's so many of them and so many, so many companies, listed companies investing in them. Info Edge is invested in Ustra, which is growing at 100-200% every year. Marico's Beardo crossed 100 crore in revenue last year, looking to grow 40-50%. Man Company of Emami crossed 200 crore in revenue. Nykaa, I mean, their male grooming business grew over 200% in the last year. So yes, men are...
Not just the women, men want to look pretty as well. Well, okay, maybe there's nothing wrong with that at all. All right, Mangalam, always great having you on the show. Thank you for joining in and educating us about all the important trends that we should keep in mind for the FMCG sector in the second half.
Yes, let's hope everything works out well for the Indian consumer story. And as we say, FMCG is life.
Okay, on that note, we're going to sign off. Well, that's it from me and Mangalam. We have to wrap it up on this note. Keep sending us your feedback, your comments and queries. See you tomorrow with yet another theme.